Stablecoins to be policed like banks. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. I want to have a look at this article from Reuters discussing, well, stablecoins being policed like banks, and I can't be surprised if that happens. And if this goes through, what is going to happen to Tether, everyone? What do you think will happen to Tether? Let's jump over here and have a look. Right now, Bitcoin's at $60,000. Ethereum is at $4,200. Tether is at $1. Binance coin is at $5.43, and Cardano is at $1.94. So, the Federal Reserve, a U.S. Treasury Department-led regulatory body, called on Monday for Congress to regulate issuers of stablecoins like banks and urged financial agencies to assess whether the role of these fast-growing digital assets in the country's payment system poses a systematic risk. A hotly awaited report by the President's Working Group on Financial Markets will likely boost policymakers' efforts to put guardrails around stablecoins, a type of digital asset pegged to traditional currencies, which the body said could pose threats to the broader financial system. Stablecoins, which include the likes of Tether, USD Coin, and Binance Coin, have ballooned 500% to a recent market cap of $127 billion over the past 12 months, according to the report. The rapid growth of stablecoins increases the urgency of this work, the report states. Failure to act risks growth of payment stablecoins without adequate protection for users, the financial system, and the broader economy. While stablecoins are primarily used to facilitate trading in other cryptocurrencies, they could become widely used by households and businesses to make payments, the report said. Currently, though, stablecoins have a wide range of policies governing disclosures, what assets are held in reserve to back the coins, and around redemption rights, all of which could make them susceptible to runs if users lose confidence in the asset. Runs could spread contagiously from one stablecoin to another or other types of financial institutions that are believed to have a similar risk profile. Risks to the broader financial system could rapidly increase as well, especially in the absence of prudential standards, the report warned. Chief among the report's recommendations is for Congress to urgently pass a law that would regulate stablecoin issuers akin to insured depository institutions, subjecting them to strict supervision by bank regulators, while also providing some form of government backstop in the event of a crisis. The President's Working Group has been researching stablecoins in consultation with the financial industry, academics, and advisory groups for the past few months after Treasury Secretary Janet Yellen said policymakers must move quickly to build a regulatory regime for the asset class. We look forward to reviewing the paper and providing guidance to the working group, a White House official said. The PWG traditionally includes the Treasury, Federal Reserve Secretary, and Exchange Commission, the Commodity Futures Trading Commission, but the Federal Deposit Insurance Corporation and the Office of the Comptroller of the Currency were also involved in the stablecoin work. The report said Congress also required stricter oversight of stablecoin wallet providers, which hold the digital currency on behalf of customers. That conclusion is likely to disappoint advocates of stronger oversight, since it can take years for Congress to pass such laws. I'm very concerned that they concluded legislation is absolutely necessary to address stablecoin risks. The SEC and FDIC currently have regulatory authority to address many of the problematic aspects of these cryptocurrencies, said Todd Phillips, Director of Financial Regulation for the Center for American Progress, a liberal think tank. Democratic U.S. Senator Sherrod Brown, who chairs the Senate Banking Committee, praised the report in a statement and said he planned to work with Yellen on a path forward. But Senator Pat Toomey, the senior Republican on the panel, emphasized in a statement that Congress should not stifle digital currencies and questions whether federal regulators should have jurisdiction over stablecoins. The Senate is currently evenly split between Republicans and Democrats. If Congress fails to act, the Financial Stability Oversight Committee, a body of U.S. regulators created following the 2007 and 2009 financial crisis, could designate some stablecoin activities, most notably payments, clearing, and settlement, as a systemic risk, which would subject them to stricter oversight. Monday's report also affirmed that both the SEC and CFTC have jurisdiction to police stablecoin activity as securities or derivatives, respectively. SEC Chair Gary Gensler said in a statement that those agencies plan to deploy the full protections of relevant laws to stablecoins while Congress considers legislation. So there we have it, everyone. What are we seeing here? Well, this is certainly an emerging sector. China has banned all cryptocurrency transactions, and now the US is going to step in and regulate and manage stablecoins. I honestly, this probably is necessary. There's some real questionable accounting practices coming out of Tether. For one, we'll have to see what happens to the crypto space, guys. Anyway, thanks for watching, and I'd draw your attention to this recent video I did about Tether and potential Evergrande exposure. We'll have to see. I mean, they've got a lot of paper loaned to Chinese companies. Keep an eye on it. Take care, guys, and I'll see you all next time. Bye for now.